Welcome again to the Healthios Exchange webinar for emerging growth healthcare companies, how it works and why should I join. My name is Scott Jordan. I am the CEO of S. Jordan Associates, a Chicago-based healthcare investment bank and consultant to Healthios Exchange. Healthios Exchange is the premier investment marketplace dedicated exclusively to the global healthcare industry. Healthios Exchange is an affiliate of Healthios Capital Markets, a FINRA-registered broker-dealer based in Chicago, London, and Bangkok. Before we review Healthios Exchange, the presentation deck, I'd like to discuss three questions. What is the Healthios Exchange? Why healthcare? And why launch it now? The Healthios Exchange is the premier investment marketplace dedicated exclusively to the global healthcare industry. Employing crowdfunding as the cornerstone of a new paradigm in healthcare investing, the Healthios Exchange offers direct access to the broadest investment opportunities on a fee-free, carry-free basis in the most trusted online environment. So the second question is, why healthcare? Well, for one thing, it's the largest, fastest growing, and most dynamic market in the world at $3 trillion. Provides superior investment returns driven by favorable demographics, universal need, persistent innovation, and rapid sustained growth. And healthcare ranks among the top priorities of accredited investors, of which only 3 to 5% of the 8 million investors who list themselves as accredited in the United States have participated in Reg D offerings. So there's a lot of opportunity. Why now? Well, one of the biggest reasons, there's a value void, or what they call the value of death, innovation gap. Many different names for it, but it's a series of irrational, systemic dysfunctional gaps in global healthcare capital flows in which the financing requirements and investment returns are misaligned at sequential points along the development pathway. So fragmentation of capital flows, severe liquidity constraints, deteriorating capital velocity, prolonged investment cycles. So essentially, I think it's 81% of venture capitalists do not fund early-stage companies. It's a slight problem. The second reason why we're launching now is Healthios seeks to raise capital from alternative sources of capital, given that majority of these investors do not participate in private placements, what they call direct investing. So most are going through funds. The other reason for launching now is that investment banks are actually searching for their own relevance in the market, because they're looking for outsourced technology solutions, ways to differentiate. Many companies are bypassing investment banks for execution, research, and IPOs, cloud computing, and big data, trying to get on those platforms. And lastly, a form of crowdfunding will disrupt Wall Street complexes to a certain degree. So if you think about what's going on in the last 5 years, you've got internet, or not just the last 5 years, but the internet providing a low-cost communication tool to disseminate information, regulation, fair disclosure, meaning that you have to provide information to all constituents at the same time. IPOs are down significantly, fallen to about 14% of the number between 1995 and 2000, about 26% of the activity between the 1980 and 1994 periods. And then lastly, Sarbanes-Oxley, which is making it more expensive to be public, and it's very expensive to raise money. And as a result, 40% fewer public companies, 60% fewer companies with analyst coverage. The fourth reason is, as mentioned in the Kaufman study, is that the average VC fund barely manages to return capital after all fees are paid. And so the VC funds are underperforming, thus they can't raise more capital. And over the past decade, the number of venture capital firms has declined by 62%. And aggregate annual investments by VCs has fallen 14.8%. The last reason, but not least, is the launch of the signing of the Jobs Act last year, and then the approval of general solicitation last week. So recent legislation has introduced a new paradigm in the financing of emerging growth healthcare companies, as the increasing prominence of the private markets will be underpinned by the crowd. So Title II of the Jobs Act was passed last week, which is general solicitation. Title III, crowdfunding from non-accredited investors, is still in the works. Title IV is Reg A+, so that's raising $50 million without having to do a lot of the the block and tackling with public offerings, and most importantly, I think, is Title V, which is raising the shareholder cap from 500 to 2,000, because crowdfunding is all about raising small amounts of money from a large group, and with the shareholder cap being at 500, it really would have limited the opportunity. When we look at the healthcare investment marketplace, you'll see this Healthios Exchange is a very robust system. And before we go through some of the functionality, I'd like to say it's really an amalgamation of three prominent platforms that are out in the market already. LinkedIn, from its community building, you can follow and friend. Match.com, we will match investor preferences profiles with your deal terms. And then lastly, AngelList, meaning out of San Francisco, basically allowing every company into the interface, no adverse selection or selection bias. So when we take a look at, there's 4 portals, but let's think about really what we're looking at here. It's three things. It's a global gateway for 100,000 accredited investors, family offices to invest directly, fee-free, carry-free in the most compelling growth companies. That essentially is, fee-free means no management fee, no retainer. Carry, no carry, well, that's pretty self-explanatory. So it's a disruptive model platform permitting institutional investors and their portfolio companies to assess vast global capital sources in pursuit of the most important financing strategic objectives. So institutional investors will also participate to seek deal flow, to build relationships, to give catalysts. And then lastly, a pathway to exit. So it enables the most prominent strategic buyers to transact in a manner that's perfect for their interests, enhancing their competitive advantage, et cetera. So there's an M&A component in here as well. 4 portals. The first portal, HX Crowd Finance. Keep in mind the portals are from seed to exit. So we go from earliest stages to latest stages, and we don't think crowdfunding alone is going to be able to raise the amount of capital needed by companies to get their compounds or medical devices. So we involve foundations with venture philanthropy. We also involve venture capitalists. But we take a look at crowd finance on the left-hand side with those dollar bills and currency. That's direct investment in the highest scoring emerging growth healthcare companies. So raise capital for non-venture-backed companies. Foundation plays, partnering with prominent mission-based organizations to advance the success of the most vital human priorities, specifically venture philanthropy, which is a direct investment model, and they call it social impact investing. Third, Express, which stands for Exclusive Preferred Emerging Growth Sponsor Security. That's a fee-free, carry-free co-investment alongside top-tier institutionally backed companies. So this is raising crowdfunding money for venture-backed companies as co-investments. And then lastly, in-market is harnessing the public markets to inspire transformational growth strategies via OTCBB, reverse mergers at the market, syndicated direct. So that's basically helping our constituents, get to the NASDAQ or to a public event, since the window's been largely closed until recently. The platform is the 3 pillars is really, you see them here: open access, scoring, and fee-free, carry-free. Open access, basically universal transparency, meaning you see all companies, you just don't see curated deals, which leads to adverse selection. And we have seed to exit, so we don't have any orphans. The second thing is our scoring system. So we're scoring non-venture-backed companies on the, we can go into the algorithms at some future point, but it's variables that are correlated to ultimate success with companies, 2,000 companies that we profiled, and HX, Healthios Exchange has indexed more than 2 million data points related to the most important value drivers. So those are the 3 pillars. We take a look. Here's the mission statement, pretty self-explanatory. We go to a new approach to healthcare investing. Once again, the crowd is the key here. It's basically, crowdfunding from accredited investors, lowering those investment thresholds, at times putting them into special purpose entities so they look like LPs, and also assisting our institutional side with closing their syndicates as well and giving access to their deals that is unprecedented without 2 and 20. It's complementary asset classes, open access, HX scoring, fee-free, carry-free. So it's kind of a summary there of some of the advantages. From no adverse selection, it just means that we include the total universe, 5,000 emerging growth companies. They each get a page, a company page, which I'll show you in a few minutes. 41 market sectors, so if you're in oncology, or it could be cardiovascular, it could be cardiovascular devices for that matter, or healthcare services. So 41 market sectors, you're tagged by market sector to increase the visibility to the institutional investors, and we're organized by ecosystem, and then these constituents like family offices, accredited investors, venture capitalists, foundations can set up watch lists so that it's an automatic catalyst updating system. The no orphans is just meaning that you have to have a robust engine as far as investors. So from an investor perspective, you'll have 100,000 investors in the database. You'll see ranging from angels and VCs, high net worth family offices, all these constituents basically with the advent of social media and general solicitation and the Jobs Act are looking to invest directly. Secondly, the fully integrated social engine, we actually proactively send people to your company page. So if someone puts Alzheimer's in their investment profile, we will link them with metadata to that page, so it's efficient. And we also provide all other services such as transaction processing, custodial, and reporting. We take a look at the research. It's a bedrock of the of Healthios Exchange. This is very data-driven, big data-oriented. We have proprietary data like capital flows, where we assess the strength of the different markets, like investors, should I invest in cardiovascular versus oncology, along with the actual company score. We have third-party research as well. So we have a lot of third-party valued research, and it's relevant to all the ecosystems, whether you're venture capital or family office or accredited investor. We take a look at scoring. What's interesting about scoring is that this is a very ambitious effort. Actually, it could be called controversial, but we stack rank our companies in quartiles based on these 104 discrete quantifiable measures. These scores are followers of pages are alerted when scores change. So say a company gets an IND, they hire a prominent CEO, they get a new patent, right? Their competition fails in the clinic. Any of those types of things, the score could improve. And at that point, any of the companies that are on the portal that want to raise money, what's interesting is that their followers will get timely updates on a monthly basis so they can keep track of their investments or investments to be. We take a look at one company page. This looks a lot like Kickstarter, but it's essentially each has its own page. Take it from the northeast, upper right corner, and we'll swing around. On the HX score, you'll see the score there. You'll see you work your way down. You see the fundraising, the target, the amount that's raised, the days left. There's an investment now button, which is basically a reserve system where they can electronically sign documents and wire capital. You have deal points, type of security, minimum raise, maximum, minimum, pre-money valuation, use of proceeds. You also, if you swing around, you'll see a description of a company. You'll see highlights, Q&A, public documents, videos, and private inquiries. So you have anything on this, anything changes on this screen. The score changes. There's a Q&A session. There's highlights. You put new documents. The followers in the lower right-hand corner will get an email of that opportunity and those catalysts that drive value. We also, this is offline meets online. So we not only help with raising money in M&A, but we're also integral to the success of licensing. So we have 14 industry conferences. You'll see we've had over 10,000 attendees, 1,500 investors. These are really, really a strong benchmark and a key differentiator of the site itself. So, licensing is a derivative of raising money, and so we think it's very important to include those type of offline events, which, think bio, partner, and forum. From a conclusions perspective, there's this Kaufman study, which was really interesting. They said, hey, this 2 and 20 model is not working. It's just not working. So what are the recommendations? So you'll see that there's 5 recommendations on this page, and this goes in concert with direct investment as stimulated by the Jobs Act and the actually passing of general solicitation. So we'll come back to these in a second. What's interesting, as we described before, there's a very small amount of accredited investors in this country that actually have direct investments in the offerings, private placements, bolstered funds, which underperform. But you can see biotech, healthcare services, and medical device all rank up in the top of the I guess the appetite for accredited investors. So the key thing is that why aren't these accredited investors more active? Well, one of the reasons is the investment thresholds are too high. So if the odds are 20 to 1 on a biotech company, which is actually worse than that, then essentially they'd rather put 5,000 into 20 companies versus 100,000 into one company. And crowdfunding allows us to do that. The also thing is the amount of accredited investors that are in angel groups. So in the country, there's about 13,000 people in the country that consider themselves angels, and only 2,500 are in groups. And so one of the big reasons for that is they don't like paying the dues, and they don't want to go to meetings. So, there's a real strong appetite out there, but it's been unfulfilled due to a number of reasons. So here on the left-hand side are your recommendations in crimson or red. You'll see, and then in the middle is how we built Healthios Exchange, and then you'll see some of the results and the benefits. But of interest, and that is let's take a look at the second one down. Invest directly in a small portfolio of new companies without the high fees. That's crowd finance. Co-invest and later on deal side by side with seasoned investors. Express, be free, carry free. Move a portion of capital into the public markets in market. And then lastly, the one that's kind of like the home run here, which is the cumulative effect of fees carry did not enable us. This is Kaufman talking about their 100 venture firm investments, did not enable us to achieve returns sufficient to reward us for patient, expensive, long-term investing. So that's why fee-free, carry-free is so important, because the current model is not working very well. One of the key aspects of the portal is what we call foundation place. The foundation place is important because the sequester has put a lot of downward pressure on grant giving and non-dilutive capital. So essentially, what we want to do is we want to help companies build relationships with foundations, because non-dilutive capital is totally in demand, and also the strategics want to build relationships with public-private partnerships. As you see a lot of those. And so the one example is Kalydeco, the cystic fibrosis Vertex collaboration of the new cystic fibrosis drug, and that's been a huge success. But there's other reasons why foundations will want to come into the portal and interact with your company. They want to do due diligence. They want to see all the companies. They're seeking follow-on capital as well. They're looking for relationships with VCs, and they would like to expand the donor base. I can take a quick look at the portal. This is the portal itself. It's a freemium model, meaning that it's free access and there's premium services. The institutional investors you'll see here who have committed to utilizing the portal for some of their deals. You also see foundations and then strategic buyers as well. So there's a lot of meaningful companies that will be present in the site. You'll be given you'll sign up and be given a username and password to get into the system. Once into the system, you will see here there are the 4 portals. You saw that before. This is the companies that are funding in the site. They were looking for investor capital. So if we were to click on formula, for example, you would get an idea of essentially the same page that we talked to you, we discussed before, we presented. But the scoring, you have all of these different measures of scoring. By the way, this is a placeholder. We're not allowing members into the system currently, but you'll see it's product pipeline, patent position, capital efficiency, institutional investor strength, management, etc. So a lot of these are proven to correlate to outcomes. The Invest Now button is interesting because it shows how much money an investor wants to put in. They have to put their contact information. They have to we have to verify they're accredited, and then they self-accredit, and then they submit and get the subscription document, view the subscription document, sign the subscription document, and then wire their money into an independent escrow account. And when the minimum is raised, actually this wouldn't be 0, but if the minimum is raised, at that point the money is transferred from the escrow bank into the company, and then the company pays us a 5% success fee. On the directory side, you see there's 41 market sectors. Companies are tagged, so cardiovascular devices. These are all cardiovascular type companies. You don't see the scoring right now, but you could also search for them by the alphabet as well. So it's you got medical device and you got pharmaceuticals, and we're building out healthcare services in the next couple months. The capital sources, we have 7,000 of these company pages pre-populated. These companies will be incentivized to come to the site and curate their page and follow companies. The reason is that it's a place to build community. Think LinkedIn. You've got venture, foundations, strategic partners, angels, and family offices. And we also have a strong research component. So we assist our investors, our foundations, in different areas here. So like in clinical chemistry, you'll see here that it's a snapshot of the strength of the sector. This might be a little bit difficult to view right here, but what's important about it is you'll see most active venture investors, most active strategics, liquidity. You also see initial IPO activity. So we're actually trying to assess the strength of market sectors alongside of actual companies themselves. We also have RSS feeds, which you can go and view. And then lastly, we have the events section. So like, for example, this partnering event, you would have the opportunity to RSVP. You have opportunity to review the documents. A lot of that functionality with the events. So we're building a community. This is like a healthcare for LinkedIn. The key goal, the key objective here is to get active members on the site. And they'll come for many different reasons, but accredited investors that are interested in either making a social good impact or essentially looking to fund the next generation of emerging growth healthcare companies. Having said that, that's the conclusion of the presentation. We will forward the presentation deck to the participants. And, if you have any other questions, let me know. Let's just, for the next minute, I'll just open it up for questions, and we'll go from there. So just if you have any questions, please submit them at this time. Okay, one of the questions is, what are the investment minimums for funding, and how do they make it more institutional-like? So from a funding perspective, we will go down as low as $1,500. So you can imagine 2,000 investors, $1,500 per investor. That's close to $4 million, and that would be a nightmare from an investor relations perspective. So in that case, if the investment threshold were that low, we would put those investors into a special purpose vehicle, LLC, with an independent shareholder, so that it's less litigious, it's less investor relations heavy, and go from there. The next question is how are we attracting investors to the site? So we have an interesting platform for attracting investors via member broker-dealers. And so different broker-dealers will have either white label portals or there will be a listing service. And so broker-dealers will be referring high net worth investors amongst themselves, and each broker-dealer can be compensated for that activity. Next question is are you looking, if it's truly seed to exit, what are we doing about tech transfer? Actually, that's a really interesting question, because we're actually building what we call Alum Funder, which is to assist universities in their tech transfer offices with raising money from alumni who have been very successful credit investors that feel very loyal to their school, and instead of giving their money away to, say, build a building or something else, or provide free tuition, essentially we're looking to have them fund the next great entrepreneurs coming out of schools like Northwestern and Yale, Harvard, Stanford, etc. Okay, that's looks like that's the end of the questions. I'll go ahead and send out the presentation deck. If you have any additional questions, please let me know. But once again, my name is Scott Jordan. We look forward to our further discussions and your participation on Healthios Exchange. Have a great day.